We're glad to have every one of you with us on the show this afternoon. It's Business Incorporated. I am Busin Amafai. Let's get the show started. The London Stock Exchange Group reports 12% increase in total revenue for the third quarter of 2019, while China's third quarter GDP slows to 30-year low. And once again, Saudi Aramco takes finger off the launch button of its mega IPO. Let's kick off with the markets in Africa, where the numbers are all in red in today. Friday here in Nigeria, the offshore index was down 0.1% at about midday, while the South Africa GSE index was also 0.31% lower. The Egyptian stock market finished Thursday, which is the final trading day of the week, around the flat line. Kenya was, however, up 1.50% on Thursday, powered mainly by the banking sector. The markets in the Middle East are closed for the week, but on Thursday, the Saudi Arabian shares, as the TADA, will close higher for a second straight session. The benchmark index was up 1.6%. In Dubai, the index fell 1.6% as well. The Qatar's index was down 0.1%. Abu Dhabi index reverse is cursed to close 0.1% higher on Thursday. And a lot of activities across Europe, where the European stock market is trading mostly lower Friday morning as traders look for signals as to whether a Brexit deal agreed between the UK and the EU on Thursday will pass the muster test with British lawmakers in Parliament this weekend. Ulrich Barks is my colleague at DWTV, is joining us for Channels Television at the Frankfurt Stock Exchange to take us through this final trading day of the week, but a very important day for the weekend on the political front, with the Brexit and the EU summit on everyone's mind today. Ulrich, good afternoon. Welcome to the show here.
Hi.
Great. So let's talk about the vote tomorrow at the Westminster. What are the traders saying in Frankfurt today about the situation and what is riding on that vote? How is the market looking at that?
The market is waiting with a lot of tension for tomorrow's vote. A lot of the market success for the next week is riding on that, a trader said. Until one is certain what the parliamentarians have said and what might happen Monday, today there's not much happening. Basically, investors are keeping their wares close to their chest, and anything can happen. It's more likely that the vote will not succeed, that Boris Johnson will not get his majority, and that one might be looking at a Brexit with no deal. One might also be looking at a falling government, no Boris Johnson, no Conservative government. One might also be looking at a perspective for a second referendum coming out of all of this. And this, next to a deal that ensures productive trade between the EU and the UK, this second referendum is the outcome that most everyone I've talked to would be most wishing for.
Yes, Ulrich, we spent the last 1 or 2 days talking more about Brexit and the deal, and then we've got the Chinese GDP numbers coming through, and the third quarter numbers, the worst since early 1990s, to be more precise. So this is the lowest in about 30 years. Are folks really shocked at the marketplace at the sluggish pace at which the Chinese economy is growing at the moment?
I think shock is probably too harsh a word, but dismayed and worried, that certainly hits the mark. Now, the share prices are not going anyplace because of the Chinese, because everyone's holding on to their hat in terms of Brexit. And the second reason is that, yes, that economic growth figure is desolate, but one is hoping that if there is an approachement coming together of the United States and China, then that can be improved. Still, you hear people saying it's not just about trade with that weak growth in China, or that weaker growth. 6% is still way more than we in Europe have at the moment. But it's also about a maturing Chinese economy, and also about all that stimulus support having come from the Chinese central bank and the government, and there being just a lot of debt around, making investing to counter the trend a little bit more difficult than before.
This afternoon, I've seen the images of ECB chief Mario Draghi with the new incoming president, Christine Lagarde. That's everywhere. But again, Mario Draghi will be sitting at the head of the table of the ECB Council for the last time next week before Christine Lagarde comes in on November the 1st. So what is everyone looking forward to hear from Mario Draghi as he departs the ECB?
I don't think any decision that will rock the markets or occupy people in business positions, but I think everybody will be interested to hear what is his answer to the question that's sure to come from the colleagues, the journalists, sitting there on his last day in the podium, in the press room after the meeting. Do you regret anything? Would you do anything differently? And maybe what is your final summary of your 8 years at the helm? Mario Draghi will always be remembered for his statement, within our mandate, the ECB will do whatever it takes to preserve the euro, and believe me, it will be enough. And so he is credited with preserving the euro. Indeed, he did do that. But there's lots of criticism, especially strong and loud in Germany, that in the end he did too much.
Yes, Ulrich, I'm sure Mario Draghi will be a little bit happy, at least taking his exit. It's Christine Lagarde who will be dealing with the fallout of Brexit from the EU moving forward. So how that will go will be Christine Lagarde's job from November the 1st after October the 31st. So we have a lot to talk about as we step into this very critical leadership change at the ECB in the days ahead. So thank you so much, Ulrich Bartz from DWTV at the Frankfurt Stock Exchange. Enjoy your weekend and see you next time.
Thank you. My pleasure.
Thank you.